Is Jameel Ahmad. He's Chief Analyst at GTC. Hi there, Jameel. Good to see you. Now, another week of selling in technology stocks. What's driving this shift in investor sentiment? Are we witnessing the bursting of this AI bubble or just a healthy correction?
It looks quite comfortably to be a healthy correction at this point, Taibbi, and as you continue to point out, we're just seeing a lot of volatility across a number of different global asset classes, not only in technology stocks. You already mentioned what's happened in oil, gold, and the more fragile global economic environment based on what's happened geopolitically over the past couple of months. And if you take a look at how many new all-time highs and how significantly technology stocks, including those in AI, have outperformed this year, it just seems to be that investors are taking some profits. We're looking again at more of a correction. And as clickbait as it would be for somebody to come on and say that the bubble has burst and there's some crisis appearing in the market and so forth, we don't see any indications of this. We're just maybe looking at some readjustment of investors' portfolios.
Right, and despite weakness in tech shares, we're seeing a rise across Asian markets. What's driving this divergence and where are we seeing the biggest gains at the moment?
Well, if we look at the narrative of the global financial market picture, and over the past couple of months, we all know what happened geopolitically, specifically within the region, and it was Asian markets and Asian economies that were seen as the most sensitive from an economic standpoint towards that particular geopolitical crisis. Now that, although the ceasefire might look a bit fragile from time to time, now that those geopolitical tensions in terms of the impact of the Strait of Hormuz and so forth has eased, it's now the Asian markets and the emerging markets world and South Asia and so forth that have benefited from the change of sentiment, that there's less geopolitical tensions. And I would say why Asian markets have outperformed over the past week or so. They might also be a little bit of investor diversification because, as we all mentioned as well, quite often, Wall Street has done tremendously well throughout this crisis. So maybe we're just seeing a little bit of money be reinvested from Wall Street, and it's going back towards Asian markets that were very fragile and sensitive to the geopolitical tensions.
And we're also hearing reports that Samsung and SK Hynix are planning to invest heavily in South Korea's western region as part of a national project to build a chip production ecosystem valued at over $500 billion. How transformative could this project be for the country?
It continues to be a hub when it comes to technology shares, technology homes, and it's just overall a hub. So it's not that much of a surprise in terms of the impact. Yes, the impact may be near term only for price, but longer term, we all expect that homes like South Korea and so forth will continue to be the focus of technology stocks and shares.
All right, we'll leave it there for now. Jameel Ahmad, Chief Analyst at GTC, thank you for speaking to us.